So what I've found with the information that's currently available to investors out there, I find the biggest problem to be information overload. You've got several stock market news channels, newspapers, there's plenty of other newsletters out there. Some of the stuff is relevant, some of it is actually quite fantastic. And so what we've done by creating 11 charts is take what we find to be the most important stuff and compile it into one place and make it as clear and concise and easy to understand as possible without any of the unnecessary editorialization.
Our information is not opinionated. Here's what the chart is showing us. Here's the things that we see. These are the characteristics. We quantify them. That's it.
The market environment right now is it's an institutional environment. They account for about 70% of the volume that you see on a daily basis. And as Andre was saying, for example, one smart mutual fund manager or pension fund manager might find a stock, their team of analysts. And the thing is, these big funds, it's a size issue. They're managing billions and billions of dollars. So between all of the mutual funds, banks, insurance companies, pension funds that are managing that money, they cannot get into a stock without making it noticeable.
You cannot hide when the elephant gets in the bathtub. Elephant gets in the bathtub, water splashes out. That's analogy for what we look for. The volume and the price action of the stock, that's the water spilling out of the bathtub. We don't understand the reason for why they're getting involved. We just know they just got involved. And when that happens, we pay close attention. And we also, it's the opposite. When they get out of the bathtub, there's a change and the water level drops, and you can see it when institutions start selling stock. This is telling you that the personality of this is the elephant in the bathtub. He's definitely getting out. There's no doubt about it. Okay, you can clearly see that the personality market is changing. It can change tomorrow, and you're dealing with individual hedge fund and mutual fund managers putting money to work, and they may not like something, and tomorrow it can change and the market can continue to go higher. But right here, you want to be defensive. You want to be very cautious and very careful, because it was in a nice tight range above the moving averages, and now it's changed personality. You can clearly see a shoulder ahead and another shoulder possibly forming. You don't know for sure. This shoulder could go out and it could move higher, and it resets everything. Everything starts all over again. Okay, so what we do is we analyze the chart, and our biggest concern with any stocks that we buy is analyzing the risk and mitigating the chance of losing money. That's really the focus of what we look at. Our philosophy is basically like this. If you have a winner and it starts to win, you let it win. If you have a stock that's not performing, you get rid of it. It's just simple. It's mechanical. We don't fall in love with them. We just eliminate, we move on, we don't think about it. So you have to understand and how to interpret those signals. And that's part of our proprietary system that we've developed on top of William O'Neill's type theory and Jesse Livermore, fundamentals from Livermore and Baruch that we follow.